Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Loe Hornbuckle. Thanks for being on the show, Loe.
Yeah, thanks for having me, Whitney. I've been wanting to be on the show for a long time, so thank you for the invite.
And Loe is the CEO and founder of Sage Oak Assisted Living and Memory Care. Sage Oak provides small, intimate home settings that allow those who need a little extra care to receive the love and dignity that they deserve. And Loe, thanks again for being on the show. And I'm excited to get into this asset class. I haven't had but one or two guests that really understand this asset class. And so I know the listeners would have lots of questions because it's not something we hear about much. But yeah, tell the listeners a little more about yourself and what you're focused on right now.
Yeah, absolutely. Well, if you've had one or two guests on the show that knew about this asset class, when you're done talking with me, you'll probably still just have the one or two guests. So, but I'll try to hold my own as best I can. So, really our company Sage Oak really specializes in a boutique model. We go after kind of an intimate setting where most of our properties are small in residential neighborhoods, or they're on one campus designed to mimic a residential neighborhood. The big keys to that business are, just having great staff to resident ratios. A lot of times in the bigger buildings, you might have double or triple worse ratios than you would in a building like ours. Also too, when you're going through the aging process, being in a home-like environment can make such a big difference. If you're older and you wake up and food's being cooked in a commercial kitchen, 100 yards away, it's just not the same as you wake up and you hear the coffee percolating in the morning and the bacon sizzling, and it's a home atmosphere. So that's a really big part of what we do. As far as me personally, I got into the business because I had some family issues where my dad had a bad experience on hospice. And while that wasn't a linear progression, when I started getting into the business, I realized all those kind of feelings coming back and really kind of dedicated to, making sure people had quality care and, weren't having to go through some of the stuff that our family did.
Awesome. Wow. So, it's neat that you had a why. You had a why, and you had something to push you kind of to provide good care for these folks. Right. But I'd like to dive into the asset class a little bit and why you chose, this asset. I know of your why, obviously, your dad's experience or your experience with your dad but why would somebody choose senior living over, say, multifamily or self-storage or something, some of the more popular known asset classes?
Yeah, well, so I think the first thing is, I think there's a couple of reasons. So what I hear consistently, number one is I think there's actually a real hunger to connect capital to causes and purpose. So the reality is, you do an apartment deal, you do a self-storage deal, you're positively impacting a lot of people's lives. But maybe you have a harder time making a direct connection between, the difference between maybe helping someone who's in a really tough situation, has a mobility challenge, maybe has dementia or some of their cognitive impairment. I think that probably makes people feel a different way than, say, storing someone's old couch would in self-storage, which is not to belittle the asset class at all. It's just a different feeling. I think the second thing is that, I don't really talk much about the demographic changes in the country as far as the baby boomers go. And the reason I don't is because right now, the average age in assisted living is about 87 years old. The oldest baby boomer is not but 74. So the baby boomers really aren't going to interact with assisted living. Now they're starting to interact with independent living, but they're not going to interact with assisted living for about 10 years. So this is truly one of those things where you can look at a chart and you know exactly what's coming. And so the question is, do you want to be the end buyer in 10 years or 15 years, or do you want to be the holder of those assets when that wave starts to come? And so we really think that there's going to be some massive opportunities for great exits whenever the institutional players really start coming into this marketplace. And they're going to probably do that a couple of years before the baby boomers arrive. And so we think a 10, 15, 20-year timeline is a very exciting time to be in senior housing. And, maybe people don't feel that way about other asset classes, right? There's still also some awesome cap rate opportunities. So, the average cap rate for a deal that traded in assisted living last year, I think, was about 8%. And I know most apartment people would be falling over themselves for deals like that. So Obviously, with assisted living, it's really a business with a real estate component. So it's a service business, first and foremost. So operationally, it looks a lot different than apartments. So it definitely is more operator centric than an apartment complex would be, for sure.
Wow. No, I can relate to the connecting the capital with a better cause. And, I do
Sure.
like that a lot. And I would try to do that myself in my own business. And I appreciate how you laid out the baby boomers and the demographic changes. But your hope is, you're going to be ahead of the large capital that comes into the space. By the time that they see what's happening in this space, you're already going to be in there and have some great opportunities for them to purchase. Right.
Yeah, I mean, that's the goal. I mean, we can help a lot of people along the way, and we operate ourselves. So that's the nice thing about what we do is everything that we do, we can do in house. And so from that perspective, if we decide we want to sell our portfolio in 10 or 15 years, then we can make a decision. Do we want to do this again? Because we can. And so that's the cool thing about it is that we have an opportunity to help a lot of people, both our clients and also investors. And then also kind of connect their capital to a cause they can understand and get behind. So many of our investors are people whose parents have gone through this process. In fact, we even have some people who have placed parents with us and later invested in our projects, which is a really cool story. We even have a client now who's considering investing their parents' money into a deal and then try to use that to pay for her care. So, a good friend of mine says you're going to interact with senior housing one way or the other. You're either going to, you're going to be writing a check or you might be getting a check. So one way or the other, you're going to be in senior housing, whether it be yourself or someone else. And so this is an opportunity maybe to be on the other side of the transaction as opposed to be the one writing the check from bed.
That's interesting to think about. You're going to be in it one way or another. No,
Yeah.
that's
Your mom or dad or your spouse or yourself, or you can be an investor. So one way or the other, you're going to be in senior housing.
might as well be in it before you have to be in it, right?
That's right. That's right.
So, tell us, I guess, the listener that says, okay, I'm used to buying multifamily or I'm used to buying self-storage or, those are the asset classes I've been focusing on, low, but now I'm going to think about this thing called senior living. And, I'd like for you to just break this asset class down a little bit
Sure.
to some things we should be thinking about if we're looking at becoming a possible operator like yourself in this asset class.
Sure. So really senior housing is really 3, maybe 4 separate things you have to kind of tear apart. So you have independent living, which are generally 55 and up communities that are, built around golf courses or tennis courts or high rises. And they're really just apartment complexes for older folks. And, they'll have happy hour and the activities are more sort of engaging than a typical apartment activity. And they'll have, maybe transportation provided. So the apartment people really probably understand that. It's the closest thing to what they do. Then you have sort of assisted living, and then you have dementia care. They're often kind of grouped together. Sometimes they can be standalone. But that's where you're providing care for someone 24 hours a day. And, sometimes you're offering other services. You still have some of the same activities that independent living would have. But now you're still not necessarily a medical model. You're still maybe a social model in most states, but there's definitely a higher level of medical component to it, right? People have care needs that you have to take care of. You're having to get licensed. You're having to go through state regulatory process. And then from there, you have sort of skilled nursing facilities, what we'll call nursing homes. And these are often places that take Medicare and Medicaid. Now, there is private pay options in skilled nursing, but private pay is way less popular than it would be in assisted living or memory care. So they're all very distinct. Independent living is probably going through a very hot cycle right now, primarily because, as I mentioned before, the oldest baby boomer is 74. That's a good age to start interacting with independent living. And so assisted living and memory care, we're still dealing with sort of the post-World War II generation. So we're still dealing with some World War II folks. We're still dealing with some folks that were in Korea, as an example, kind of using wars as the demarcation. And so the baby boomers really haven't arrived yet. As far as, and then skilled nursing has really been going through kind of a tough cycle, in large part, I think, because assisted living and memory care have taken a lot of market share from skilled nursing. So really, as far as the asset class goes, we're a little different than all of that because we do these small care home facilities or a planned care home community. So the development, we're mostly developing now. And the reason is because we're so focused on quality of care and making the caregiver experience good as well, because that's certainly an important consideration. You really want happy staff. We're building product because we find that nobody really out there has built exactly what we want. And so we kind of took our model and are now replicating it, and eventually might do that across the country. Right now we're doing it in 2 states. And so we're more of a development company. And so of course that has all the things associated you would have with development, which I know is definitely very popular right now in self-storage and a little bit of multifamily. So that's just a little bit about kind of the asset class in particular. And you may have some specific questions that you'd like to dive into, but that's just kind of a basic overview.
Sure. Yeah. And I was thinking about those, the independent living, assisted, dementia care, skilled nursing, and you talk about you're a little different than those. But how you mentioned a little bit about how, I guess each one of those are almost in their own cycle. Is that right?
That's right. Yeah. So, I mean, honestly, what happens is the term senior housing is such a big umbrella term that I use it because it's industry term, but the reality is that it's not really descriptive enough to mean much. And so, the average person in independent living versus skilled nursing is so different that it's very difficult to put them together. Plus, one is a private pay, basically an apartment for older folks, and one is a medical facility, right? Basically a hospital, maybe with a better paint job, is one of my friends say. So you've obviously got 2 very different types of people in there. And then in between those, you have assisted living and then dementia care. And so they're all going through different cycles. And so you can't really talk about senior housing as one asset class, in my opinion. Otherwise, for example, people say things like the baby boomers are not coming to senior housing. Well, that's not really true because they're not old enough to come to senior housing. And so they really wouldn't be turning it down at this point in terms of assisted living. Does that make sense?
Yeah.
So it's just the asset class is so big and encompasses so many different things that you really have to kind of look at it as almost 3 buckets, with independent, assisted living and memory care, and then skilled nursing.
No, I appreciate that. You laying that out like that. It's very interesting. And thinking about, if I'm thinking about senior living, it's much more in depth than that. And I need to really think about the different types of care I'm looking to provide and which one's in what cycle. And where would I find the information of the demographics and things like that that are going to help guide my decision of which type of facility I'm going to focus on?
Yeah, I mean, there's several companies out there that really do a good job. I mean, there's Senior Housing News does a good job with data. There's a company called McKnight. There's also a company called NIC, which is like the National Investment Conference for Senior Housing. They do a lot. And then, of course, there's a ton of stuff in the U.S. Census. So there's quite a few sites that'll aggregate U.S. Census data, so you can see kind of, which areas have the right amount of income for a private pay facility, which areas have the right demographics of age, and you can kind of cross-check those numbers against each other. Because ultimately, if you're in private pay, assisted living or dementia care, you're going to want people that are older and have the affluence, or at least a long-term care insurance policy to pay your rates. So the average cost right now for a private room across the country is about $4,000 a month per bed. And as you might imagine, that's the average. So there are some places where it's $2,500. There are also other places where it's $8,000. The difference between Washington D.C. versus Little Rock, Arkansas, is a pretty big difference in terms of what the rates would be for assisted living. I'll let you guess which is higher. So between D.C. and Little Rock.
Yeah, no doubt. I'm close to D.C.
Yeah.
So what kind of buying criteria, or just stay in your niche, what kind of buying criteria do you have, and how do we evaluate what kind of buying criteria we should have when trying to get into senior living like you have?
Yeah. So, I mean, first off, I think you have to decide if you're going to hire a third party operator, then that's the first place you kind of start. So get your operator lined up first, because the operator in assisted living and probably skilled nursing, maybe less true in independent living, is so important that they're often required to be a guarantor on the loan. So your operator is way more of a partner than they are a vendor. And so typical structures for an operator, like I said, looks more like a partnership than it does, hiring a third-party apartment management company where it's just a fee for management. Generally, in assisted living or skilled nursing, they both get a fee for management, and also a piece of the deal. And they're also generally required to be guarantors in the loan, because lenders, frankly, don't want to, take back these assets because they don't know how to manage them. And so the last thing a bank wants to do is be like, okay, we're in the assisted living, skilled nursing business. They don't want to do that. And so they really, really underwrite the operator very heavily. So that's the first place you have to start. They don't grow on trees. One of the reasons why we sought out to become an operations company was, we looked out in the marketplace and saw there was all this capital that wanted to come into the marketplace, but there was a lack of operators. So there's definitely real opportunity for people that want to get in and, be the operator and deal with staffing and deal with licensure and all the things like that. For us personally, we're focused on a secondary and tertiary market strategy. So right now, many major cities are overbuilt. And a lot of that will be rectified with the demographic changes that I mentioned. But ultimately, for the next couple of years, the folks that are in assisted living are on average passing away faster than they're being replaced. And so we'll have a little bit of an occupancy tightness for about a 2 or 3 year period. And then you'll start to see that kind of abate. And so much of the new construction that's gone up is competing for market share. Now, we offer kind of a unique selling proposition being these small boutique assisted living facilities. So even though Dallas is probably one of the most overbuilt markets in the country, if not the most overbuilt, we're at 100% occupancy. The national average is about 88%. Dallas is probably a couple ticks below that. So you've got to build a non-commodity. I think the mistake you would make is just going with you look at a chart and go, hey, we build this, everyone's going to move in. We don't have to be unique. We don't have to be special. That's where I see people make mistakes, is not creating a unique selling proposition, something that resonates with the clientele. So it's not about sticks and bricks. It's about people. And so you really got to make sure that you have a great operator, a great executive team, because they're the ones that are really going to drive the culture, of your facility. And all the time I see facilities that are empty, and you change the management staff and they fill up, and vice versa. You can have a full facility, change the management staff, and they lose all their residents. So it's definitely all about people. For us, like I said, if we look at secondary and tertiary markets to avoid that sort of overbuilding issue, and also because we develop land, we look for good land prices. You only need about 6 or 7 acres minimum to do what we want to do, and we'll buy sites a little bigger than that at times. So anywhere between 6 and 7 acres up to about 20 acres is kind of our sweet spot. And, we go into marketplaces where there's a lot of growth opportunity, but maybe they're being overlooked. Somebody in New York is not looking at, the Lake Charles, Louisiana market as a market they want to get into. The other project we're doing is in a North Dallas suburb called Denton, Texas. Denton's an awesome market. The fundamentals are fantastic. But again, because it's a little off the beaten path, it's a secondary market. We're not necessarily competing with some of the same players that might be in Dallas and droves, for example.
I think it's interesting that, everybody says, well, as far as like multifamily, well, everybody's got to have a place to live. You heard that so many times. Sure. Everybody's got to have a place to live. And I can see where if multifamily is overbuilt, well, not everybody's got to have your place to live. They
Right.
can move anywhere, right? Or a different rental
Sure.
place or whatever. But I can see where if you can find a niche like senior living and it's not overbuilt, well, and I guess, and you have a good operator, they're going to stay full, right?
Sure. Yeah, well, they should. Obviously, you've got to look at the market fundamentals. It's no different than any other asset class. But again, because it's so people driven, if you do a good job with the culture, if you have a compelling vision, then you do a good job. The biggest thing I see, to be honest with you, and because this is kind of somewhere between healthcare and hospitality, right? That's the big debate going on in the assisted living world. Are we healthcare? Are we hospitality? And what I'll say is that one thing that healthcare has historically done a really, really bad job of in this country is communicate. Healthcare doesn't communicate very well. Think about the last time you went to the doctor. Think about the last time you did anything with healthcare. The communication's always been pretty bad, in my opinion. That's starting to change, and people like me who have a very strong background in communication, we're coming into this sort of loose healthcare business. We're changing communication. And so one of the core tenets of our company, we have 3: great care, great food, and great communication. Communication was important enough to make it in the top 3 things that we offer our clients, because so many times it's just, hey, I have a problem, and the people don't lean into the problem and solve it. So if a son or daughter comes to you and says, hey, you made this mistake with mom or dad, can you get it fixed? so many companies are making you go through 3 and 4 and 5 levels to quote unquote fix the problem if they do. Whereas us, we're like, no problem. We understand. Let's get it handled. Shoot a text to our whole staff. Hey, make sure we're doing this with this person because we're having this issue, and try to get it handled right away. And so for us, communication is really a big key. Something hospitality often does very well, but the healthcare side is very weak on the communication front, in my opinion.
Technology is creating opportunities in the commercial real estate industry at an increasingly rapid pace. Technology-fueled innovations are enabling those forward-thinking firms to reduce back-office costs and risk, raise equity faster, and increase asset performance so that they can focus more time on activities that drive revenue. Today, IMS is the most widely adopted investor management software for commercial real estate firms. Visit us at investormanagementservices.com.
So, I'd like for you to briefly hit on like finding that operator, and then, do you become your own operator? I guess you got to get some experience probably first, somehow, but you're partnering with an operator. But do you all do your own operations now, have your own separate operating company, and is that the goal?
Yeah, so we do have our own operations company. I've never sought out a third-party operator. I did a project where I intended to do that. And I went to everything in the marketplace, and unfortunately, I just wasn't impressed what was there. So one of the best things to do is you tour facilities, and if someone is doing a good job and kind of blows you away, then you're like, hey, let me see who owns this operations company and try to hire them. But the market that I underwrote, I just didn't have that, and so I was like, well, I guess I'm going to have to build one, and so that's what we're in the process of doing now. So what I'll say is, I had a good friend of mine, and he told that's in this space, and he is an investor and an owner, and he hires third-party operations company. And one of his standards was something very simple. He said that he's got one operator that's not as good, one that's very good. And what he said is the one that gives hugs is the good operator. And so what he said was, you just walk in and, there's a tour or something going on. There's always somebody hugging somebody. Hey, it's great to see you. Give you a hug. And so it's really a lot of love in this business, right? You're taking care of someone 24 hours a day, especially if you're dealing with somebody that might have cognitive impairment that's asking the same question over and over and over again. You got to be patient. You got to love what you do. So most caregivers don't get into the business to get rich. They get into the business because they care about people. And so that was his standard. He said, I got one operator that needs to give more hugs, and I got one that gives plenty. And so from his perspective, that was a thing. And I know that sounds trite, but what he's really trying to say is look for the operators that the culture is of caring versus, just thinking about it like a business.
I like that. The operator that gives the hugs. That's awesome. So tell us, on the syndication side, a little about, structuring this deal, and maybe how long do you expect to hold something like this, and how is it structured? Probably different from your normal multifamily deal or self-storage or something like that.
Yeah, I think it probably follows probably a somewhat familiar track with. So I think we have to break out if you're buying existing versus if you're buying, doing a development like what we're doing. So there's plenty of senior housing value add opportunities out there for you to go in and solve some sort of problem they're doing, do some capital expenditures, get the right management in place, and then, do like a typical multifamily deal. In terms of development, I think it's very similar to multifamily. I think self-storage probably moves on a faster timeline just because it's easy to construct, and the filling of it is a little bit different. But in terms of development, I think the business plans will look very similar to a multifamily development. Typically, you'll try to get it built and stabilized within 2.5 to 3 years, and then be looking somewhere for year 3 to year 4 to get the refi done and take as much capital off the table as you can. The big difference, I would say, is in the exit. I think a lot of apartment business plans or multifamily business plans are on that kind of 5 to 7 year timeline in terms of projection. We generally like to hold a little bit longer, and the reason is the aforementioned demographic change. I would hate to, do all this work and then exit in year 7 when I think year 10, 12, 13 is going to be really the best year. So we typically model for about a 10-year hold, and that's mostly just because that's when we think a lot of the big players are going to start looking at this asset class. So, someone may make an offer in year 7 or 8 that we feel is awesome and we want to take advantage of it. But ultimately, we model for about a 10-year hold, if that makes any sense.
Sure. No, that's great. Then you can, depending on what the market is doing, like you said, you can exit early.
Sure.
But at least you've got your investors prepared for that 10-year hold. So that's not news to them when year 5 or 7 comes along.
Absolutely.
So, Lo, what has been the hardest part of the syndication business for you?
Well, so I think because I think the biggest challenge for us really isn't necessarily the senior housing part. It's being a developer, right? So there's just so many people that want to invest in existing cash flowing assets, and then have you throw a washer and dryer in there, or put on a new roof and charge more in rent. So I think the biggest challenge is overcoming the development piece. And so mostly all I've done is raise money for developments. And so it's been a different experience than some of my friends that are in just straight multifamily syndication. They're buying, Class B apartments and spruce them up a little bit, and they're turning over 2 and 3 years. So for me, the biggest challenge has been getting people to understand that we develop for a reason. Not only can we build a great product at an affordable price, but ultimately we're designing a product that we think is really changing the industry. So I think the word disruption gets used way too much, but we think of ourselves as kind of challenging the paradigms in assisted living. I was reading an article today. Actually, I was just reading it whenever we jumped on the call today, and there was a company that's a luxury developer that's excited to enter luxury assisted living. And the first thing they said in the article is that, we just don't think these luxury assisted living offerings are very nice, because you'll have these places that have 12-foot ceilings, and we'll look at the door, and the door is a standard size. And I'm thinking to myself, that's nothing. What matters is care, food, and communication. People, the other side of the business, these large box assisted living, they think it's all about gyms and chandeliers and all these shiny amenities. But most people, once they start to interact with the product, they realize it's got nothing to do with that. It's who the caregivers are, who the nurse is, who the executive director is, how good is the activity director at getting people to engage. Those are all the things that matter. And so for me, seeing somebody, basically brag about entering the space and we're gonna make the doors taller. I mean, that's exactly the wrong paradigm. And so the reason we exist is because you've got a hospitality company over here that doesn't understand the care piece, and then you have the care piece over here which doesn't understand how to communicate. And so we kind of try to bridge those two gaps and really offer a product that focuses on care, food, and communication, and not gyms and chandeliers and tall doors. Most seniors are not that tall, by the way. So I've got a guy that's 6'9", so I mean, I guess he would probably like the tall door piece.
What's the number one thing that's contributed to your success?
It's hard to say. For me, I think, for a while I was just sort of happy and content to be just a good, assisted living operator. And the biggest thing I did was I started kind of putting myself out there. So doing things like this and going to seminars. I go to quite a few seminars. I coach quite a few people. And what that's about for me, I love doing it, but what I really enjoy from it is just kind of letting people know that we're out here and what we're doing, just because it is an unusual asset class. And you mentioned that you haven't had that many assisted living people on the show. And so we're kind of, we go to a syndication event, and we're kind of like the interesting person at the cocktail party, because he's doing senior housing. We want to talk to him. So I enjoy getting out in the community and telling us what we do. And like we talked about earlier, there's such a hunger and desire to connect capital to sort of causes. Everybody is like, hey, it's awesome that I can make money investing in this or money investing in that. But you know what there's a lot of money in? You can make a lot of money being an arms dealer, selling weapons to child soldiers. I don't know that that's the most fulfilling business model. So we kind of like the idea that we can make our investors money and they can feel like they're truly helping people that often come to us in these terrible situations saying, hey, I'm in this big building and I'm really not happy with the care, really need an improvement here. So we get so many people that come to us in desperate situations. Maybe mom or dad has fallen too many times in a big building and they're really looking to find a way to cut those down, for example. And so people really resonate with being able to help other people and, make money doing it.
You may have just answered this, but I'd like to ask, how do you like to give back?
So the nice thing about this business is I feel like I'm doing it every day. I mean, I'm constantly interacting with the residents. I'm constantly spending time with them. I think one of the things our families will say is we kind of try to go above and beyond. We're both a flexible company, but we also understand that sometimes somebody's going to be on vacation and mom or dad's going to have a medical emergency. And, some people will just stick them in an ambulance and send them to the hospital. And our culture is like, no, jump in the car with them and go until someone can meet them there. So I think that's the nice thing about what I do is I feel like I can combine my job and my passion with helping people. And, obviously we deal with a lot of end of life in our business. And so we get an opportunity to really see people through the whole life process, and whether that be bringing dogs over for pet therapy or having some kids run around who really, older people oftentimes really enjoy having younger folks around. So it's just a great opportunity to do something where you feel like not only are you doing your job, but you're also, basically giving back every day. Ultimately, I am a capitalist, but I really enjoy the idea of being able to help people in the pursuit of the almighty dollar.
Nice. Now, I really appreciate you being on the show today, and you've laid out so many great points about senior living that I didn't know. I've taken so many notes. But tell the listeners how they can get in touch with you and learn more about your business.
Yeah, absolutely. So the first thing is my email address is loe@thesageoak.com. So that's THESAGEOAK.com. So loe@thesageoak.com. And listen, feel free to email me about anything. I mean, sometimes I'll do a show like this and someone will email me and say, hey, I'm looking for a place for my mom in Kentucky. Can you help me? I'm happy to do all that. I have a pretty good national resource. I do some national coaching. And so I have a pretty good resource all across the country. So I'll do everything I can to try to help you find something. Maybe you're in the Dallas area and you're looking for something for one of your family members. And then of course, we do obviously accept investor equity. So someone may be interested in learning more about investing. We'll be happy to give them that information if they're interested.
Great. Loe, thank you so much for your time and just sharing your expertise, in this asset class. I know the listeners have learned a lot. I know I have too. And appreciate the listeners being with us today. I hope you'll go to LifeBridge Capital and connect with me as well. And I hope you'll go to the Facebook group where we can all learn about this business and grow our businesses together and from experts like Loe. So have a great day, and we will talk to each of you tomorrow.
Thank you so much.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.